Welcome back to Dukascopy TV. Joining me to discuss the macro global outlook is Emmanuel Ferry from Banque Paris Bertrand Sturdza. Thanks for joining me, Emmanuel.
Hello.
So, Emmanuel, can you tell me what are the big factors affecting the macro outlook right now?
The macro backdrop is still dominated by debt, deflation and deleveraging. That's why we will remain in a low growth, low interest rates and low return environment. In Geneva, we expect US economy to grow by 2% next year. It's still below trend. And globally in Europe, we are still close to recession levels with deflationary pressures. So that's why when you have a combination of Eurozone crisis, slowdown in China and public finances uncertainties in the US, things will have to get worse before getting better.
And what is the asset location of the consensus view?
The consensus is still rather conservative. We have a neutral stance on equities despite the summer rally. On government bonds, there is a persistent underweight and a neutral allocation on cash. Actually, the major tilt on asset allocation is in the credit space when we have an overweight, and it is the case still February of this year.
And in the short term, what is your outlook for the markets?
Well, we have a very busy agenda for September. We have the Fed, ECB, also the report on Greece, the German Constitutional Court, etc. So probably we will have some positive support from central banks with the Fed after the ECB, but probably it's already priced in by the market. Too much good news is already priced in. So that's why in the very short term we can expect a final leg up in the market, but it will be much more an opportunity to reduce the risk exposure rather than entering new positions.
And what decision do you think we can expect from Bernanke over at the Fed?
Definitely, Bernanke will continue its pro-market orientation with more monetary easing. So we can expect a new round of quantitative easing. The problem is that it's a short-term stimulus, and it's true that at the macro level, the housing sector is bottoming out, which is good news, and it's a positive effect of the large monetary support. But it's not really sustainable, and we need to see an improvement of the broad macroeconomic environment, and probably it's not enough.
Okay, and as we can see, many global GDPs are slowing down. What do you think can be done to help this, to boost GDP?
And in Europe, we have less stress at the level of the banking sector. But today, the new major cause for concern is a sharp slowdown in external trade, and probably now the market will be much more focused on emerging markets, and probably the market now is waiting for a new round of monetary stimulus in China. This is probably the new game changer for the coming weeks.
And finally, what are your favorite market themes for the future?
The emerging consumer is a big theme in the equity market. Quality. Today, the corporate sector is in a really good shape. So the corporate sector, it is better to favor the corporate sector instead of the government sector. And income in the equity space today, with interest rates close to zero, the dividend yield is quite appealing, and the equity market is fairly valued. So plenty of ideas, while the asset allocation is close to the benchmark.
Okay, And in terms of currencies, which currencies do you think are the ones that we should watch out for in terms as they are becoming stronger even during the current situation? I
would say gold is probably the best currency today. When we look at the euro-dollar currency, it's an ugly contest. It's a 120-130 range. So it's not. There is no real trend, I would say. Probably the Singapore dollar, the Swiss franc, Norwegian krona are among the safest currencies today in the world. There is no real regarding commodity currencies. They will suffer from the global slowdown. So probably the Australian dollar is the most overvalued currency today.
Okay, well, thanks so much for your time and thanks so much for your insights.
Thank you.
Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.